Hello, good morning. Happy Monday. It's a new trading week. My name's Jordon. This is Jon, and welcome to Market Wake Up. You need to know ahead of your trading week. We're going to talk macroeconomics, but without all the macro mumbo jumbo. And today in my spotlight, we're going to be talking about the greatest country on earth, Australia. And we're going to be talking about the RBA. We're also going to have a little bit of chat about what's going on in the world, because every week we do this stream, there is a new story, there is a new angle, and there is something crazy happening. So without further ado, guys, warm up, tell us where you're tuning in from, and let's get into the Market Wake Up. Good morning, Jon. How you doing?
Morning. Good. I'm really good. How are you?
Yeah, I'm good. I'm getting up to speed after the weekend, but from what I can see, it's been a interesting week last week and over the weekend.
Yes.
We still. He's a chatterbox, the new president. So there's always something for us to discuss. And there's always something for us to go into. But there's a few things that have caught my eye, which is a little bit different compared to what we are used to here on Market Wake Up. Cryptocurrency. I know you're invested a little bit in cryptocurrency. Not so much. I'm not going to sit here and tell you about a crypto that I like or something like that, right? Last week, Japan hinted that they're going to ease the taxes on crypto and even welcome ETFs on crypto, which was a big move. South Korea doing the same thing. Looks like they're opening the door to cryptocurrency, which is it's interesting to see these big governments obviously starting to make the move and incorporate this technology. And then here's the fun one, right? The president of Argentina.
I've not
seen heard this?
No, I've not seen this. No.
He rug pulled a cryptocurrency. He's been sued because he has rug pulled a cryptocurrency.
Really?
I'm not joking. So while these other nations are starting to incorporate all the technology, Argentina's gone, hey, hold my beer, watch this. And the president himself, you got rug pulled by a president. That's just impressive, what is happening. But that's as much as cryptocurrency I'll go into. There's your little update moving into this new week. I bet you didn't see that coming.
No, definitely didn't. Didn't think you'd start there. I didn't think you'd start there. But no, that's interesting, isn't it? I didn't see that. You know, I thought that Argentina was like back in crypto. I didn't realize they weren't. So
yeah, they were until 12 hours ago.
Oh, right. Okay. It's mad though, isn't it? I was looking the other day. I was thinking to myself, you know what? I'm going to set up a Binance account, and I am going to, because my crypto is investing crypto. I'm not actively trading it. So
you want to trade it?
I think I want to trade it, but I think I want to trade it in a very specific way. But the problem I've got is, I don't understand it in depth enough yet to think this is a good enough plan that I'm trying to do. Basically, I want to short the meme coins, but I don't know how I'll do that. Eventually, I want to see
how that for an investment philosophy. Short meme coins.
Yeah, I want to short, but I don't know if I'm going to be able to.
Why do you want to short meme coins?
Because I just think they're ridiculous.
But look at Doge. It is now a department in the US government.
Yeah, but have you seen the price of it now?
No.
Well. Let me just tell you that it is down significantly. It is down.
I don't look at cryptocurrency.
I'm stuck on futures markets there, but I was looking at Dogecoin. Yeah, I mean, yes, it has rallied, but it's recovered all those gains that it did have. And I wouldn't say, is Doge classed as a meme coin anymore? I don't know. I want about these ones that just pop off immediately. You know, the Trump coin, right? Trump coin. That's obviously a big talking point.
Where do you short it?
That's my problem. Like, how do I get access to get short on something like this?
I'm not going to lie to you, Jon. I think this investment philosophy might be flawed. I'm a bit concerned. I just ask you don't use 1 + 1 = 0 funds.
No, I won't.
Because I think I know a lot of traders that were currency traders, even futures traders that went into cryptocurrency like day trading and swing trading and have done phenomenally well. And it's like what we get told all the time, you know, the people that go from CFDs to futures, they just find it so easy. Well, I've actually seen a lot of currency traders go to cryptocurrency, and same thing. If you take the philosophy you've learned, not that one. If you take the building a trade idea of getting probability in your favor, correct risk management, and apply it over there, I have actually seen more people do better than not, which I find fascinating. But still not enough to convince me. No. I think I'll be going into equities trading before I go into crypto trading.
Yeah, absolutely, 100%. Although I just like the idea of just trying to fade that move, because I was looking at Trump coin and I was like, that has gone 40% below its open value now. It rallied significantly and it just turned on a dime, you know. And we're starting to see more of these now. Have you seen that guy from? What's his name now? Dave Portnoy from, is it Portnoy?
Yep. Yeah. From
Sports, is it?
Sports, yeah. That's right.
So I think he had his own crypto over, you know, the last week or so, and it's done like a bit of a pump and dump. And I think he even named it as like jail time something. Like it's like just to kind of add to the meme of it. But yeah, it's that to me is just like, it's like penny stocks, you know, and seeing penny stocks go up ridiculous amounts because, you know, they opened a Twitter account and they went up 300%. And I just think that is the most ridiculous thing ever. So I feel like those are ridiculous. I want to try and get some action on them. I don't think I can, but if that ever became available, I'm doing it.
Let me know how you go, because I'm curious. I'm keen to see your net worth.
Yeah.
Thanks, and the people you'll be losing out to are meme coin buyers. That'll just be entertaining. But let's get back into our world. Last week, anything tickle your fancy? Anything get your attention? Did you take any trades last week?
I did really well last week. I lost one trade, but did really well on a silver position. Actually, on Friday, it was up over 4% at one point. Silver was on the day. We then had that retail sale data out of the US, which then pretty much reversed price straight away for the rest of the afternoon. But I came out of it before the data. I wasn't sure on the data. You know, looking at the US data over the past few weeks, it has started to come in a little bit below expectations. So I feel like we are starting to see that sort of dollar taper off a little bit. You can see it on the chart as well. You know, if you look at the the dollar across the board, it is down across all of the G7 currencies at least. I mean, even if you look across to your I guess your exotics is what it's known as. But if you go take a look at sort of your other currencies, you can see even against sort of like the Chinese yuan, it's down. The peso, it's down against as well. So at the moment, we are starting to see the dollar kind of give back a lot of those gains recently, and it looks to me like the data is backing that up now. You've seen those core retail sales jump the way they did. That surprised me. You saw gold sell off the back of it. You saw silver sell off the back of it. The one thing that stayed higher was the stock markets. Riddle me that.
I can't.
You can't.
I can't. But rather than just complaining about it, I made money on it this week. So last week.
Okay, yeah.
So, but not in a ETF in a specific. I did a little seasonal play on a local stock. Well, I say local stock. It's not. It's one of the biggest corporations in the world, but listed on the ASX. So I managed to capitalize on a little bit of those gains.
Oh, I like it. Well, I mean, I think at the moment it's just a scenario of, I don't know whether we're getting into that space again. It just doesn't seem like anything's following, any kind of particular logic yet.
Because John's wanting to fade meme coins.
Well,
Things making sense. I've got short hair. You want to short meme coins?
There's been a lot of changes. There's been a lot of changes. But yeah, no, those are the only kind of things that really saw, and I like this silver upside play. I think if you look at the kind of ratio between gold and silver at the moment, it is more favored for me to be a buyer of silver than gold right now, because that ratio is suggesting that silver is undervalued versus gold to me. So I like this kind of silver play. I think we've got the benefit of
correlated at the moment,
a little bit lower. Say that again.
Heavily correlated in 2025 so far, silver and gold, heavily correlated.
Yeah. And I do think if we start to see gold continue to push towards those kind of $3,000 levels and above, I do kind of want to be more on the side of silver, just because I feel like there's more value there to be had. Could we get back up towards those kind of $35 levels? Can we actually breach that this year and head towards sort of the $40, $45 levels? That's where I'm kind of really interested in the silver market at the moment. So yeah, I've basically been buying silver all year so far. Any kind of dips that we've had, I've been buying. So last week was a great week. I lost the trade on a Kiwi yen short. I really like the idea of playing that market to the downs. I wanted to buy yen basically, and I was looking at where to do that against. And we spoke about. Yeah, well, I went for the Kiwi because it's set up first. So I was looking across the charts and I was like, right, I've got either Euro yen, Swiss yen, or Kiwi yen is where I kind of wanted to position myself. Kiwi, because we've got the RBNZ coming up this week. I don't know if you saw the unemployment rate out of New Zealand last week, but that came in at like 5.1%, something like that. So they've got unemployment rate that is growing significantly. I think their GDP it was inflation expectations came down to 2% as well. So I'm more erring on the side at the moment that the RBNZ are going to cut a little bit more aggressively. They're priced in potentially to do 50 basis points this week. So I was like, well, I quite like this Kiwi downside. The only way I'm going to contradict myself here now is because of the commitment to trader reports, which show a really heavy position. But that position's been there for a few weeks now. It bounced off the 2022 lows Kiwi US dollar did. It started to push towards that 5,800. I was like, okay, but is it going to be stronger than the Japanese yen? I didn't think it would be. And yeah, price just kind of took me out on that one. But, I only put 0.25% risk on it because price was in a bit of a dodgy area and there was a lot of news coming out. So I was like, I'm not going to go heavy on this. I'm just going to go light on it. So yeah, all in all, I had a good week.
Fair. Yeah. No, I wasn't too active in FX terms. I was in a couple of equities here and there and playing with it. I've been really driving into some different risk management techniques recently, just altering how I'm risking money. Reviewing last year, it's shown me that I did leave a lot of money on the table at different moments when I had high probability setups, both historically speaking and confident speaking on macros, and still only backing it with a small amount of cash. I need to be heavier there, but I don't like the psychological me going, I'm going to go heavy here. I need something to tell me that I should be going heavier here. So I've been playing around with a few different metrics and a few different things, which I'll share in the future on how I'm going to manage that, and when my system is going to give me the green light to go even more aggressive, and when I should be more passive, which is incredibly hard to do. It's one of the hardest things in trading, choosing when to size up and when to size down individually, not over time, individually on different positions. But yeah, the RBA cash rate. So you just touched there, the RBNZ, they are forecasted to go 50 basis points in 2 days. They want to drop it by 50 basis points, which brings us in on Wednesday, I think it is. The RBA expected to cut 25 basis points tomorrow. Now, I think that'll happen. Inflation expectations year over year are supposed to come in to around 2%, but they're actually forecasted by the end of 2025 to be back up to around 2.8, 2.9. We're currently at 2.4. So they're forecasting that inflation will be higher than where we're currently at by the end of 2025, yet they're also still forecasting 75 basis points worth of cuts in the next 3 months. Okay. that's another thing we can unravel. But the reason I really want to point this out is, one, we are seeing that weakness in the US dollar come in a little bit. So the Aussie dollar is gaining a little bit of strength there, but do not be fooled. I think that's predominantly the US dollar. And with the Australian dollar being shorted so heavily recently, with people expecting all of this to happen, you are seeing a bit of buying power now because they're taking profits. I got a bold call.
Okay.
They will cut 25 basis points, is my opinion. And within a couple of days, the government will call an election.
Oh, really?
They will use this rate cut as wind in their sails to attempt to win another election. And they will take the full benefit of it. So the current government need to call an election by May.
Oh, okay. That's what I was going to ask.
Yeah, they need to call an election by May. So it's coming at some point. I think they're going to cut 25 basis points. The RBA will. The current government will go, yep, let's jump on the back of this. Let's claim we did this, and let's go run into the election. So I think the Aussie dollar is going to be a little bit more volatile this week than meets the eye.
Usual, yeah, that makes a lot of sense. I was wondering if there would be, like, where would the trade be? You know, I always kind of like asked myself that question, if there was going to be something.
Where's
so I think there's a good. Okay, now you've said that, it makes a lot of sense that maybe there could be some kind of volatility around that. I was thinking if they didn't cut, that would probably be a really big, decision from the RBA in terms of, because there's a lot of, like you said, inflation is coming down, but it's forecast to stay a little bit higher. It's a little bit stickier in Australia, isn't it? It hasn't been coming down as aggressively as other nations. So I know that the unemployment rate rose slightly, ever so slightly, but also job creation has grown quite significantly. So job market is not looking, like it's kind of, flatlining anytime soon. So there's still a little bit of demand going around in Australia. So I do feel like there could be a chance, a very small chance, that they don't cut. And I think that would be a rock to the market. I mean, it goes with our kind of 2025 predictions. The Australian dollar is either going to make or break this year, and it's just going to. And I think
means it's going to do nothing.
Yeah, it's going to absolutely go sideways.
I think it's always important to put yourself in the central bank. We get the same kind of information the central bank does, right? It's all public stuff, and then they make their decisions. And I think when you're having a look at the RBA currently, you can have a look at what's happening internally, and we can address this. But I think right now the biggest pressure is externally. I think the tariffs going around, China having those economic struggles. There's a lot that's happened and happening external to our nation, which is really impacting the money flow. And I think, in my opinion, that's why they're leaning towards cutting, because yes, they can hold them higher. Data probably suggests that they should, but if they hold it higher and China have the economic collapse, or we get slapped with a 30% tariff XYZ, like, it will kill it. It'll be such a strangle. So if we've got room to just let it go a little bit, just loosen the lead just a little bit, it's not going to make too much of an impact. But then if all that does happen, we're still proactive, and so I think it's more of a safety precaution than a progressive, hey, we've done the hard yards, let's cut the rates. It's more of a, I don't like the look of that wave. I'm going to just step a couple meters back.
Yeah. No, that makes a ton of sense. Where would you position yourself then if you think that you're going to get the 25 basis points cut and the election potential? What would you do in that scenario? Or would you do anything in that scenario?
I think, as in like actionable, like where I'd put money, I think I'd fade the initial reaction to the cut.
Okay.
I think if we do get a cut and the market moves, I think I'd fade it and then wait for the volatility on the election call. As I said, the election call might not happen, but I think it's probable. I think if there's going to be a time for you to call it, why not now? I think it'll be let the interest rate happen, let the first 15 minutes of wildfires go nuts, and then fade it back to the mean.
I like it.
It's an unopinionistic play.
Yeah.
You guys go wild. Someone else say what you want. I'm just going to fade it.
Yeah. Honestly, I don't think I've touched the Australian dollar this year. I've kind of stayed well away from it. My analysis this week was a potential pound Aussie long, but I ain't touching that. I'm going nowhere near that.
Is it because you got to buy the pound?
Not because I got to buy the pound, but just because that GDP expectation kind of threw me off last week. Yeah. Coming in a lot higher when there's been so much media around the fact that GDP is meant to be low and remain low. That kind of came in, and it was almost like the market was like, oh, maybe it's not so bad as what we all think and anticipate. I don't think it's still going to be great. Don't get me wrong. I do feel like there is going to be some downside. I don't think the UK is going to see that growth really follow through. But the problem that creates is, what do the Bank of England do from here? You know, if they've got good GDP numbers, inflation remains high, what can they do? Their hands are tied at that point, in my opinion. Like, can they just go, well, we're going to loosen up the economy even further, blah, 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 blah. But inflation's still fairly high. They're really struggling in the UK at the moment to do anything about it. So I think the pound is on the struggle bus, I like to call it. So my sort of usual technical indicators that I use, you know, would say buy the pound, but
currency strength indicators saying buy the pound.
It is saying buy the pound. It's one of the stronger currencies last week. So,
and commitment of traders?
Commitment of traders, the non-commercials, the hedge funds, they are selling pound quite aggressively, but they're starting to unwind those now. So we saw a decrease in short positions and an increase in long positions from the hedge funds. So
just explain to me once more why you're not doing it.
Because my head is telling me no. This is one of those weird. This is the problem with trading, isn't it? Like, I have a very
gut feels important.
Yeah. This is why I think a lot of trading comes down to just having experience in the markets and going off your own personal experience, because you can, like, I can say all these great things about it, and then, you know, the pound could go on and do wonderful things, but if I'm not confident in it in myself, I'm not going to get the best out of it regardless. You know, I'm not going to like you've said,
you're going to be getting out of that position early and fiddling with it and watching it you're going to lose sleep over it.
Yeah, exactly. Because, you know, I'm in the UK. I'm around people. What did actually shock me, I went out on Saturday night.
Is that the shock, or is
that the shock? Yeah, that's
the trader. The trader left the house.
I left the house. I went to the pub, and it was so busy, like ridiculously busy. Like, we were packed in like sardines in the pub, and I was like, wow. I was thinking, is there any sport on today? And I was like, I don't know if I think there was a pause on the rugby this weekend. I think it's starting again next weekend. So I was like, I don't think there's any rugby on. Football wise, the Villa weren't playing until, Villa had already played. So I was like, well, no one's there, because it's where I am. It's usually Villa. People watch the Villa in that area. So I was like, well, there's no real kind of football on at the moment. So I was like, why is everyone out? It's just like, and I was packed in. I was like, that's quite interesting. That is, you know, usually I try and get out, Jord, to have a little look to see what's going on. I speak to my mates and go, how's the job market, and apparently in the recruitment sphere everything's quite good at the moment. Everything's really well. So I go, okay, well, maybe things aren't so bad. And now I'm kind of saying this out loud. It's almost like maybe I should buy the pound. It's always good to have a talk about your trades, guys. You know, when you do it on your own, it's hard.
This is why it's so important to voice. Yeah, but look, one thing you do have against you is the pound's not great seasonally. During February and March, it's not one of the most beautiful things, but I think the post-pandemic buzz is very much in full swing. It took a lot of people a fair few years to get used to get back out there to build up the confidence, get over all the anxieties and everything that comes with it. And I think they're in full swing now, so pubs are back to being busy. I don't know if you're like me, John, but I hate crowds. Packed places and stuff. Like I'm fine in them, and I'll have a good party and whatnot. But like, I would much rather a quieter area.
Yeah, I had one beer and left.
There you go. So this kind of economic boom that a lot of places are experiencing. Keep in mind, still technically extremely inflated prices. Have you seen eggs recently?
I've not seen eggs.
Yeah, because they're not in the supermarkets. You can't get them. They're gone. No, where I live, it's actually quite all right because we're quite isolated as a city. But on the East Coast, and especially in the US and stuff, they're up. I think it's 18% year on year.
That's quite significant.
18%. Empty supermarkets gone. Just phenomenal. People.
Why is there such demand for eggs?
Buy a chicken.
Yeah.
Buy a chicken.
Unlimited eggs.
Buy a chicken. Like,
I don't know, man. Because the problem in Australia is it'll get eaten within a couple of weeks, wouldn't it?
No, we'll just have what by us.
No.
Probably.
By like all the creatures that you've got out there, just coming around.
Yeah, I almost stood on a snake the other week. I'll tell you about that.
No, I didn't tell you anything.
Meter and a half, red belly black. We almost stood on it. Yeah, like literally 20 centimeters from the foot. Phenomenal. Big thing.
They're very venomous, right?
I think so.
Yeah. Do you not get a guide in Australia like avoid this one? Do not touch this one.
Yeah, snake bad. Don't touch. That's it.
Yeah. See one, walk away.
But no, moving into next week. This week. Obviously, we've touched on RBA, but we do have a lot more coming out as well. You've got claimant count change, unemployment out of the UK, which is forecasted to see a little bit of growth. Okay, if you get that good data, would you buy the pound then?
No.
Okay. After that, you've got Governor Bailey having a bit of a chit chat. You've got the CPI coming out of Canada as well. The Canadian dollar is one of interest to me because that's been a little bit stronger on its own right, not including the US. Now, I tried to correlate it with the oil and be like, yeah, this is what. No, it's not. The Canadian dollar is finding a little bit of strength. Don't be fooled by the US dollar weakness at the moment. I genuinely think the Canadian dollar is pushing. So keep an eye on different moves there because that is heavily shorted at the moment.
Yeah,
there's a good bottom opportunity in there with the Canadian dollar. So make sure you keep your eyes peeled to that. A little bit later on, then you got the RBNZ looking to cut 50 basis points, quite aggressive, coming in on Wednesday. Then you got British CPI year over year forecasted to uptick to 2.8%, followed by FOMC about 12 minutes later, the meeting minutes. Unemployment rate out of Australia expected to uptick. Again, another reason we probably shouldn't be cutting. But once again, I think it's that step back. The wave's pretty big. Unemployment claims coming out of the US. In between there, actually, you might miss it. You got the prime loan rates coming out of China, the 1 year and the 5 year. Keep an eye on that because that will have another volatile push on the Aussie dollar. This week, I would likely be avoiding that Australian dollar if you're not confident on a direction or if you're not just fading moves. I would look to be avoiding it. Then on Friday, you name it, they've got it. European manufacturing and services PMI pretty much across the board. Pound manufacturing services PMI, US manufacturing services PMI, and Canadian retail sales as well. Across the board, US, good. Euro, okay. Manufacturing still down, expected to grow, but services actually pushing in, forecasted to get 42.4, which is a little bit lower, but 42s, 43s is better than where we have been recently in Europe. And then Britain as well, sitting around that 50, forecasting a little bit of growth on manufacturing, staying the same on services there, but around about that 50 mark. Satisfactory.
Yeah. I mean, if we did see good retail sales in the UK on Friday, I would be more leaning to be a buyer of the pound. I think at that point, I just think it depends because that is forecasted to grow quite a bit as well. And if retail sales are growing, then you can expect potentially a little bit of burst on the economic growth side of things. You looked at the FTSE recently. The FTSE's been making new highs. But that, like I said before, the companies that are held within that predominantly sell to the US. So typically, if the US are doing better, then you would see that flow into the likes of the FTSE. But that's just something interesting to kind of point out there. I think, for me this week, I looked at the calendar and I was like, there's a lot going on. There is a lot going on. And, every time I open the calendar and see it that big, I just think, I think the market, it does tend to shift back to sort of risk off in those kind of scenarios. So, I mean, I still like the idea of buying yen. I just really do. Although it took me out of a trade last week and stopped me out of one, I just think that was just extra volatility around data and stuff that just knocked me out of that move in the end. I went for a bit of a tighter stop loss because I was risking a little bit less. So I thought I'd go with a tighter stop. And I think that's ultimately what just led to my downfall on that move. So I still like the idea of buying yen in this kind of environment that we're in right now. Looking at what you said though about CAD, Canadian dollar has been fairly strong, really, really strong recently. Yeah. Currency strength for me is showing it's one of the strongest at the moment. And I've been looking to try and see if there's any kind of opportunities around involving CAD. The only kind of one I really like the look of was a potential CAD Swiss move, but that was at a range high. We came up into the 64s, and I was like, I don't really want to try and trade through a range high, especially one that's been established for a good year or so. I want to wait to see if it can kind of break out of that move first. So, but yeah, the Canadian strength, I don't know, it's a weird one for me. Although we have started to see their unemployment rate come down a little bit, it was fairly high. It was starting to come off those highs. It's almost like, where is this CAD strength fueled from? Because it was very, very weak. And then all of a sudden, it's had a very strong switch around. Now, I could talk about the commitment of traders because there was a cut signal basically saying that there could be a moment where we do start to see this reversal in price. But it's really ultimately come from the fact that they paused the tariffs. And since that day, CAD has just gone from strength to strength. And I don't know when that's up, because they said it was a 30-day pause to negotiations. And I can't remember what day this all kind of kicked off. So, probably could look at a dollar CAD chart, to be honest. And
yeah, I think, you can see the gap.
The gap higher and it drops down.
Yeah.
So,
I think that's the market knowing or predicting that there's not actually going to be anything. This is what I said when he first came out and said, right, we're hitting Canada with this. It was more of a message. It wasn't. It goes back to the old quote: "Don't take him literally, but take him seriously."
Yeah.
All right. When he came out 25, don't take it literally. That's not actually what's going to happen, but take him seriously with the intent. And I think that's a lot of people just getting back to grips with that. It was the same with the first term of him as president. And then they've done the 30-day pause. The likely event is the end of that 30-day pause. They've come to an agreement, and it's going to be both for both economies. It's going to be good for both economies, and it's going to grow. And that's why people are willing to bet on the Canadian dollar there. Because I can't see a world where they really tarnish that trade agreement between the two nations there.
No, I don't think so either. I think it'd be a silly thing to do, to be honest. Yeah. Although I did see that Canada have started to kind of branch out a little bit, because did you see the conference over the weekend with JD Vance in the EU?
I didn't know, but I heard
conference. Yeah, apparently he turned around and just said, like, the US and the EU are they're not on the same wavelength at the moment, and basically said that he worried about the free speech in Europe not being, he's worried about that. Nobody has free speech here, blah blah blah. And there were some of the comments made that really angered the European leaders. So that was quite interesting, because we know trade tensions could potentially develop between the EU and the US, and the fact that JD Vance comes over and then starts kind of making comments and stuff, poking the bear, just kind of added a little bit of fuel to that fire. Euro dollar did open down. I did look at the market on the weekend, and I did see a gap form across sort of the safe haven pairs, but euro dollar pushed higher towards that 1.05 recently. We started to see a rejection of that. I did wonder if this would kind of influence a little bit of euro selling, and at the moment across the board euro is down. I think off of what we've spoken today, it's fade Aussie dollar if it does a big move, short euro Japanese yen, short euro CAD. Yeah, I like that. EuroCAD.
I reckon that's a playback. A playback, a playbook.
Yeah, I like that. EuroCAD has been on my list for a good while, and we're kind of in a nice little area on EuroCAD. That sort of 149s, just below that 149 handle. I think that's a good place to be at the moment. I was looking at the daily chart, and I was like, the pullback that we've had over the past few or 4 days has just been very, very subtle. It's not been like one that's been fairly aggressive. So I like that. When I'm looking at a trend in market, when I'm looking to try and take advantage of strength and weakness, if I see a pullback in that market that is very shallow in depth, I'm like, yeah, this is looking pretty good to me. This is looking pretty good. And EuroCAD is on that level for me right now. So yeah, I like that market a lot. I think that's a good one to point out.
Yeah, beauty, guys. There's your setup for another week. If you have any questions, make sure you hit the comments below. We do answer them. Reach out to us on LinkedIn or have a chat. We're not unreachable. We wave. If you've got questions, send them our way. We've got 2 videos coming out this week. One of mine. I've given you a little rundown on interest rates and how to trade them, which is a good one because I know a lot of you guys want to learn how to read these markets in a macro basis. So I've gone in there with a little bit of humor and a little bit of fun on interest rates. And then, of course, we've got our Friday newsletter as well coming out later this week. So stay tuned. If you did enjoy it, make sure you hit the like button, and we'll see you soon. Cheers, guys.